Still on entrepreneurship, despite Kenya being a top destination for foreign direct investment, close to 90% of small and medium enterprises lack financing solutions in the short, medium and long term, according to Digital for Africa. Take a look.
Kenya has the fastest growth of foreign direct investment in Africa and the Middle East, at 47% in 2015, according to the FDI intelligence. Furthermore, the country set a target of $2 billion worth of FDI inflow in 2016. However, most of this capital is directed to mega infrastructure projects, leaving very little for investment in small and medium enterprises, whose annual credit gap stands at $6.2 billion, according to the International Finance Corporation.
$1.9 billion that has been spent or allocated by impact investments also includes what development finance institutions are allocating to businesses. But we also have to be careful that early stage businesses, in my view, are the ones that struggle the most to access capital, even impact investment. Early stage meaning startups, no traction, no track record, 2 people in the company, and where they still have just an idea without a full business. I think where you're seeing most of that $1.9 billion going to is companies that already have traction, have a product, and probably have revenues. So I think because we don't have a real venture capital industry in Africa as a whole, it's very, very small. The early stage businesses are the ones that are struggling the most.
The solution to the financing puzzle for SMEs is, however, not an investor-only gameplay. The old challenge of developing credible business models still haunts young business owners.
There's a significant funding gap. I think the number quoted earlier on was $100 billion a year. Whether you're talking about that going into businesses that do infrastructure development or SME funding or whatever part of the economy that drives the private sector, it is a significant amount of money. So the question is there enough money available? No, there isn't. Is there enough deals available? No, there isn't, because you need quality deals for any investor to make money, to invest their money in. Another challenge, obviously, is these businesses that are around, but they're not well structured, means that a funder is not going to look at them in any case. So you have enough money available. You have businesses looking for money, but there's a mismatch in terms of what they can talk about.
When you look at the SME financing piece, I think we have a lot of work to do in that area. I think one of the things that the Trade and Investment Hub is trying to do is to make companies much more investor ready, improving their overall strategies, improving their human capital use, improving their governance, working on their financial controls, helping them access markets, international markets. So I think without that, it'll become very difficult for SMEs to become attractive as portfolio investments for external investors going forward.
Only 20% of African SMEs have a line of credit from a financial institution, according to the African Development Bank, leaving 80% to seek financing from friends and families or long-term impact investors.
Impact investment will obviously focus on businesses that are trying to solve social problems, or what we call wicked problems. So access to healthcare, access to financial services, financial inclusion, working with smallholder farmers to increase their productivity, access to energy. So that's what is exciting for me, that impact investment can provide financing to businesses that would never be able to get a loan, because their business models seem too social in mandate or too esoteric. So I think that's the first thing that's great. The second thing is we've seen businesses that have started off with impact investments, but over a period of time, once their capital runway has improved, they've got traction and they've started to make revenues, they've been able to access commercial capital.
I think the international number is in the vicinity of 70% of businesses are started with, the typical friends, family, and those around you that you can convince, and not by the formal sector, not by being able to convince a bank or an equity fund to put money into your business. And I don't see that trend changing anytime soon, because it's a lot easier for somebody in the slums of Nairobi to go to people around them that have a little bit of money than go and invest to convince an investment fund or a formal one of the big role players. However, there are a number of impact investors, and this is really where we are talking about making a mark in getting the formal funding into the informal areas.
Besides capital, Entrepreneurs and SMEs owners in the country lack the necessary skills to manage businesses. According to the 2016 MSME report by the Kenya National Bureau of Statistics, 30% of business owners have attained O-level education and only 9.8% of them have university degrees.
I believe firmly this is a skills mismatch. If we look at the previous slide and we talk about where we are, and we've got skills for manufacturing, and we've got skills for some of the non-next generation technology, we are setting ourselves up for failure, ladies and gentlemen. We need to make sure that the right skills do exist. I read a number the other day, which mentioned that by 2020, 40% of graduates will have a degree by the time that they get a piece of paper that will be no longer relevant. So we're putting our kids through university and getting qualifications, and by the time that they've spent thousands of dollars getting the qualification, they don't have a job because there isn't a job like that in the market.
Based on these and other factors, 49% of small businesses are therefore likely to collapse within the first year of operation, according to the Kenyan National Bureau of Statistics. Consequently, investors and lenders have taken up strict measures to cushion their capital.
If I'm an investor, if I'm a lender, I want to try and remove as much of the risk as possible with respect to lending to someone or investing in a business. And what we're trying to do is we're trying to create the legal framework to say to someone that if this business does not succeed, we have measures in place that we will be able to leverage and remove productive resources out of an unsuccessful entity. And that is something that hinders many, many investors, businesses, lenders, because they simply don't trust the existing legal frameworks to be able to extract value at the end of a potentially unsuccessful endeavor.